So why use market cap weighted index funds? Well, this is like the simplest and most important insight from modern finance is the idea of the market portfolio, that the only thing that all of us can hold at the same time is the market portfolio. So if I decide, you know what, I just want to own growth stocks, such as the Magnificent Seven in the US right now. I just want to own stocks that are, in technology, that have had their earnings grow really fast. Well, okay, I can do that. But if I do that, that means that somebody else has to own everything else. And so I'm making a bet that I'm right and the person who owns everything else is wrong. And not only am I making this bet about the right and me being right and that person being wrong, it's even worse than that. The risk that I'm taking and the risk that that person that's taking the other side to my bets is taking, our risks on average are higher than the market risk. Both of us have to make some extra return to pay for the extra risk that we're taking, because there's extra risk. However you slice up the market into different pieces, you're creating extra risk by not having all the diversification that you get in the market. And this is a really, really critical idea. It's something that people haven't been talking about as much because there was so much focus on costs for the last 30 years. We need to be concerned with our return to risk ratio, and by doing concentrated bets and stock picking and having concentrated portfolios, we wind up with all of us we're taking more risk and our counterparties are taking more risk, and there's nowhere for that extra return to come from. We're really big believers in index funds, in market cap weighted index funds. So until relatively recently, we just had index funds. And an index fund was a mutual fund, or what they call a 40 Act fund in the US. And these are great, it's a great way for people to pool their risk, but they happen to be kind of tax inefficient in certain ways. That if somebody redeems out of a mutual fund, and all of the holdings in the mutual fund are at a profit, and then somebody just takes their money out, then everybody who's left in the mutual fund is like deemed to get some of those capital gains. So I'm holding this mutual fund, I'm not selling it, but somebody else redeems from my mutual fund that I'm an investor in with him, and I'm going to get capital gains. That's so unfair. With ETFs, that doesn't happen. So the ETF is like a better version of a mutual fund.